This week, the world's been going mad with a tech sell-off. There's been higher inflation, possible rising interest rates, and that's caused all of tech to just start to fall. But was it really a tech sell-off, or is there something more to it?
I'm amazed how many people own stocks. I'm amazed how many people own stocks.
Welcome back, everyone. My name's Paul. Now, this week has been dominated by the idea of this tech sell-off. All the news articles are just mentioning everything is tech sell-off, tech sell-off, tech sell-off. So today I want to discuss if this is really a tech sell-off or if there's a bit more to this. I'll take a look at some companies that I think might be worth getting into, and we'll take a look at my portfolio, see what that's been doing, because I took a pretty bad hit this week as well. And of course, we can't not talk about crypto, especially after what Elon Musk did to us this week. But the big news that has dominated this week is the tech sell-off, and it's calling for all sorts of doomsday scenarios. Seriously, the news and the FUD on this is so intense. Fear, uncertainty, and doubt, by the way. And there's a lot of suggestion that investors are selling out of technology companies. I'm here to argue that they're not. Because certain technology companies like Zoom this week did take a bit of a nosedive, losing 13% in pretty much just a week. But the thing about stocks like Zoom is they've been on a downtrend since January. Zoom has lost 17% this year, and arguably its downtrend started somewhere more like October last year. Tesla stock is down 21% on the year, and Peloton stock is down 34% on the year. Even pretty good companies like Teladoc are down 33% on the year, and one of the more exceptional companies, Salesforce, has actually lost a quarter of its value from September last year. But not all of the technology stocks are down. Microsoft, a company that is as tech as you can get, is up 11% on the year. Amazon hasn't really lost anything for over a year now, but it hasn't really gained anything either. But it's not a sell-off. Nvidia, another exceptional tech business, is actually up 8% on the year. And Alphabet, which is probably my number one stock of all, I can't believe I don't own any of it, on the year is up 28%. So I think some of the higher quality, the real big tech companies should be quite insulted to be included in this tech sell-off. Because it's not. This is an overvaluation sell-off that has been going on a lot longer than the news is telling you. The stocks that sold off the most all have stupidly high PE ratios, if no PE ratios at all. And the solid, high quality, high cash flow tech companies are actually doing just fine. Google is a company that I think is doing exceptionally well, and I think the market is severely undervaluing. And this isn't based on wild possibilities of what possibly could be to come. This is based on real revenue and real cash flow. And you can totally understand why Google is not having the same problem during this tech sell-off. Everything has suffered a little bit this week, but there is a lot more evidence out there that shows that low quality tech stocks are in for much more of a problem. Real tech stocks, not just companies that are loosely being classed as tech stocks when they're actually healthcare stocks or video stocks or car makers. Real tech manufacturing stocks like semiconductors have actually done exceptionally well over the past few weeks. Broadcom is a great example, up 28% just from October. ASML Holding is another good one, which could still be kind of near value. I can't bring myself to buy it right now. I'm sad I missed it, to be honest. And Micron Technology. But my favorite right now is KLA Corp. I keep banging on about KLA Corp because I think this company is absolutely exceptional. And to look at the graph as it is right now, you could probably say this is overvalued. But when I'm looking at KLA's growth over the long term, I'm looking at a lot of the areas where it had quite terrible growth due to recessions. If I change Fastgraph's perception to a more recent growth model, it changes the data that goes into the PEG ratio. We start to end up with a much higher and probably more accurate growth model for KLA right now. KLA is currently sitting at a PE of 21. It generally trades around a PE of 15-16. That's what the market kind of rates it at, mostly because semiconductor stocks haven't really been that exciting over the past 10 years. But now semiconductors have started to take over, and growth is getting pretty interesting for them. So if I just take the analyst estimates at face value right now, and we aim for a P somewhere between 21 and between 15, around 16 or 17 or 18, we can get a final share price of about $336. That'll be up 13% over the next 2 years, total annual return of 7.36%. That's not the 10% margin of safety that I'm usually looking for, but with KLA, it's such a brilliant business. I think I'm willing to lower that margin of safety a little bit. It's worth remembering though that I don't have a clue how low these low quality stocks are going to get. No one does. But I am quite convinced now that there isn't a tech sell-off as such. It's more of a overvalued sell-off, a correction if you will.
I'm sure we're going to go through a doozy of a correction this year.
Albemarle was one of my favorite stocks last year. I sold it off at about 130, 150% up. Did amazing on it. But I knew Albemarle was overvalued, and since January it's taken a bit of a tumble, down 12% on the year. And it's because I think valuation matters. And Albemarle is an excellent example of this because it's done this reversion to the mean thing numerous times over the years. Albemarle's a pretty boring company as things go, but every time the world gets very excited about lithium, the price just goes massive and gets way off its earnings. What we're looking at here is the black line, which is showing the share price, and the orange line is what the company earns. And even though earnings go up, the share price comes tumbling back down. What happens is that the share price and the earnings don't go up at 100 PE ratios forever. At some point, the earnings and the share price have to cross over and meet. And this happens numerous times to pretty much every stock ever. This might be what we're starting to see with Zoom right now. We could see Zoom continue going sideways for the next 10 years or so while it starts to build some earnings up. We might see Peloton come back down to a proper good level. And we might see Teladoc come back down to around $40, $80 possibly. And I am saying this possibly because it might not happen. But companies like Teladoc, even though they aren't earning a profit right now, and that's probably on purpose, they will still need to come down to their operating cash flow, just like Amazon did. This is exactly what Salesforce is doing right now. Salesforce could be becoming an exceptionally good value company very, very soon, possibly by the end of the year. Because Salesforce's market cap is coming back in line with its operating cash flow. Operating cash flow, for me, is a very good indicator of how good a growth company is doing. And thank you to Tommaso for asking me an interesting question the other day on Instagram. He says, like every guy, I'm down on my tech stocks. He wants to switch back to value, things like AT&T, and asking me what I'm holding that is actually down. So this is my portfolio. It's currently sitting at 26,660. We're down about 400, 500 quid from last week. Last week I crossed 27,000, and losing 500 quid in a week is actually quite a lot for me. I don't generally lose that much. As the amount in my portfolio gradually grows, those week-on-week losses and gains are going to get bigger, and it looks like I've lost around 3% on the week. Most of my losses came from Broadcom in the tech sell-off, and I think Broadcom is my most down stock, as it were. This is because I bought it quite recently, and generally most stocks are a little bit less safe now. Most stocks are now coming to their fair value or are vastly overvalued. But running the numbers on free cash flow, we have a very healthy company that is running way below its free cash flow growth rate. I'm still quite happy to hold Broadcom. I was considering buying it at 420, and I still will consider it if it does go below 420. Right now, I'm just happy to sit there and hold. 5% down is the biggest problem that I've got with my stocks right now. Maybe in the future, this will all change. Maybe we'll have a value crash at some point. Very possible. I'm happy to just ride that out. However, with KLA, I'm starting to get slightly bullish again. And some of my picks in here are either extremely overvalued or are companies that I'm just not feeling it anymore. I'm thinking maybe I made a mistake getting into some of these companies. Like Merck and Pepsi, maybe they're companies that I don't have such a conviction on anymore. Or even Walt Disney, where I am in for the long term, but this company has become so vastly overvalued. Is it possible that I should trim my Disney position here? Do you think I should sell Disney or a little bit of Disney just to take, 300 quid of profit off the table? I haven't decided yet. But my portfolio is down on the week and I have absolutely no problem with that. These companies all have extremely high cash flows that are all paying back to shareholders. They are all generating shareholder return. And most importantly, I believe that all of these companies are in areas that are still relevant going forward in the future. I try to be as non-speculative as possible, but I do believe that if you are currently in companies like Tesla, Peloton, Zoom, okay, maybe not Zoom, but Salesforce, CrowdStrike, Teladoc, companies like that, if you're down a little bit on them, it might still be wise to hold. These are still strong companies, and the idea that in the future they will change the future and they will have exceptional future growth rates, I don't feel there's any point in guaranteed loss of money right now when in reality the future will be okay. Something that is impossible to predict right now is crypto. This week, Elon Musk has said that they won't be buying more or taking on any more Bitcoin until it's sorted out its environmental issue. This just tells me that Tesla and Elon Musk don't have a clue what cryptocurrencies are. I believe that Tesla, and in particular Elon Musk, has shown countless times that he doesn't understand the inner workings and the reasoning for cryptocurrencies. He asked Michael Saylor whether he could transfer large amounts. Of course you can. He brought Bitcoin into an ESG company and then decided it wasn't ESG anymore. And I don't think that Elon Musk is considering his purchases of cryptocurrencies very well. And on the news that Tesla might be dropping Bitcoin, this happened, this huge drop. However, it hasn't changed any of the technical analysis on Bitcoin, and it also hasn't changed the psychology of it either. Things on Bitcoin do seem to be holding exactly how it's supposed to still. There's a lot of testing on this resistance right now, and if this does resume back up, that's happy days. But if this does fail, you could see a Bitcoin price of around 35,000 down here. That for me would also be completely normal in this Bitcoin bull market. However, I do love Ethereum so much more. Ethereum looking stupidly strong. We're starting to get a couple of little clues in here as to what the new Ethereum might look like as we go forward. So let's draw in a couple of lines, shall we? We still have what looks to be this prime trend line right here. So you can expect Ethereum to keep bouncing along all the way to this prime trend line. It could come down to here. But if we go in a bit closer, we are starting to see a few more little localized bits of resistance and support going on now. We're starting to build up a little more of a pattern again. I'm very surprised that Ethereum has held on and started to consolidate, even creating this weird looking bull flag at the moment. And Ethereum to me is really looking like it might sit there for a little while at 4,000. Obviously, cryptocurrencies are absolutely mental and you can never take that as fact. But why don't we take a look at Dogecoin as well? I've never actually looked at the chart on Dogecoin. eToro has only just added it. And there is not a lot to go on here. This just looks absolutely mental. This could be quite a large bull flag maybe, especially with today as Elon Musk has started teasing that they might take on some Dogecoin, but that doesn't make financial sense at all for a company. That would be pretty much suicide for a company to jump into something as volatile as Dogecoin. You've got to remember now that if Bitcoin drops down to about 30,000, I think Tesla loses $1 billion off its balance sheet. That would be so detrimental to the stock price and so detrimental to the company. It'd be crazy. So with Bitcoin right now, I am still holding on. It does appear that it is in a consolidation and a bit of a holding pattern right now. So I'm not doing anything with it. I'm holding on, sticking to the plan and seeing where everything goes. Thank you very much for watching, everyone. The investment app that I use is called Trading 212. If you wanted to get into investing, you can sign up to a link in the description below. If you sign up through that link, you can get a free share that's worth up to £100 whenever Trading 212 decides to open back up again. I also buy my Bitcoin and Ethereum on eToro. If you wanted to sign up through that, you can sign up through a link in the description below. You really help the channel out if you do that and deposit and make a trade. Just remember that cryptocurrencies are stupidly volatile, and this has been quite a wild and crazy ride recently. Feel free to join the completely free Discord. We have lots of different resources. In particular, we like this graphic at the moment, which gives you a good flow diagram of when to sell a stock. This might be a little hint at a future video that's coming up. And also feel free to check me out on Instagram. God knows what I'm doing on here. Again, thank you very much for watching, everyone. And if you enjoyed this video, please feel free to like, subscribe, and invest.
I'm amazed how many people own stocks. I'm amazed how many people own stocks. The sucker's going up.